Meet Kumar. Kumar is the owner of a small SME supplying machine parts. For months, he has provided goods to his buyers on credit. One day, Kumar meets a new prospective client and is offered a very lucrative business deal. He is required to supply a large amount of machine parts on credit and does so in good faith with an agreed payment deadline. Kumar sends the invoice to the client after delivery, and when the due date arrives, he receives no payment. And in spite of multiple payment reminders beyond the regular trade credit period, Kumar does not receive payment for those goods. Upon inquiry in the market, he finds out that the buyer is insolvent and is unable to pay for the goods. Poor Kumar is now left with bad debt and no chance whatsoever of recovery, even if he decides to take legal action or appoint a collection agency. And it's now going to cost him time and resources to recover his payment with no certainty of recovery or a timeline within which such recovery would happen. Now, let's turn back the clock. Let's pretend that before Kumar offered credit to his customer, understanding the risk involved with doing business on credit, he took out a trade credit insurance policy from SBI General Insurance. Kumar estimates his annual credit sales turnover, declares the history of his customers, including their names, declares bad debt history, and provides all the required documentation. After assessing the risk and this information, SBI General Insurance then creates a tailored policy on his behalf, so that now, if Kumar sells his goods on credit and isn't paid, he is protected. So how does it work? Kumar trades Rs 1 crore worth of machined parts to his buyers every month on credit terms. One day, Kumar does not receive payment for those goods beyond the regular trade credit period. Upon inquiry in the market, he finds out that the distributor is insolvent and is unable to pay for the goods. But Kumar isn't worried. He gathers his required documents and submits a claim to SBI General Insurance. SBI General Insurance processes the claim and secures the best outcome for his business, while Kumar continues to conduct his day-to-day business operations. Not long after, Kumar receives the money from his claim into his account, putting cash straight back into his business. Kumar's SBI General Trade Credit Insurance policy has saved his business from losing his profits and from a loss that he may never have recovered. With SBI General Trade Credit Insurance, Kumar sleeps better at night knowing his profits are preserved, relaxes knowing his liquidity and cash flow are protected, knowing he has the confidence to expand his business, feels comfortable knowing his credit management is monitored and overall process strengthened. He sleeps with Suraksha and Bharosa, dono, knowing the increased security has kept his business secure while giving him and his investors and suppliers confidence. So, if you have a business and work on a credit basis, you too could sleep better tonight with SBI General's Trade Credit Insurance. What is Trade Credit Insurance? Trade Credit Insurance covers your receivables against losses from late or non-payment of your receivable, that is, receivable from goods sold on credit. If your customer has accepted the goods which he has ordered, has committed to pay but fails to pay you, you are indemnified for the value of goods or services you have delivered. What does it mean for you? You protect your cash flow against bad debt. You increase your competitiveness by safely offering more attractive terms to your prospects and customers. You optimize your credit control and release yourself from monitoring of the buyer's financial health. You can offer peace of mind to your financial partners and, more importantly, yourself. It's as simple as that. Trade Credit Insurance helps you secure your commercial transactions and supports your company's growth. You stand protected in case your customers default in their payments due to commercial reasons, such as insolvency, bankruptcy, or protracted default, non-payment over an extended period. Political reasons, such as wars or riots, changes in government policies or actions, example, import-export restrictions, stoppage of cash transactions, etc. With Trade Credit Insurance, your business stands protected while giving you the scope for expansion into new markets with peace of mind. What's more is that Trade credit insurance can be taken for both domestic as well as export businesses. Isn't that great? Let's look at the scenario when it comes to day-to-day business in India. 50% of the domestic B2B sales are on credit, which average around 30 to 45 days. Usually 10% of the invoices remain overdue for over 90 days. Increased liquidity concerns is equal to rise in uncollectible receivables, much higher than the Asian average. With the protection of trade credit insurance, you can provide your customers with extended payment terms that benefit them while keeping your business relationship secure. How does trade credit insurance work exactly? 1. SBI General approves the credit limits on your customers considering the maximum outstanding amount that can be anticipated during the life of the policy. 2. Each of your customers' risk potential is individually analyzed and underwritten and credit limits are arrived at. 3. These credit limits can be reduced or cancelled upon depending upon deteriorating credit conditions. 4. You will also be provided with a discretionary credit limit (DCL) that will enable you to automatically offer credit terms up to a preset maximum limit amount for smaller customers. Does that mean that one's existing clients that have overdue payments can be covered? Unfortunately, no, you won't be able to cover customers with existing overdue payments. However, once their payments are normalized, then they can be covered. How exactly are the premiums calculated? Premiums are calculated on the basis of several factors such as industry, types of goods sold, credit period being offered, quality of buyers, insurable turnover, past experience, debtor concentration, etc. Premiums are charged on insurable turnover, open account or credit turnover only. Any business done on advances, LC and DT is excluded from insurable turnover. How to claim? If you're approved or discretionary customer fails to pay you for services rendered after the due date, a claim is triggered. You can either seek extension or notify the claim wherein you will be assisted with debt recovery. Isn't that simple? Are there any risks and exclusions to this? Insured risks are the risks that can be covered under the contract. Some of the major exclusions that can't be covered are listed below. Disputed trade transactions, countries which are not covered, sales to sister concerns or subsidiaries or government department, expiry of import and export licenses, third country shipments, radioactive contamination, wars between major powers. So all in all, SBI General's Trade Credit Insurance enables your business's success in a challenging economy by giving you risk protection for your cash flow, gain business intelligence and confidence, expansion of businesses and enhanced customer relationships, reduction in bad debt reserves. So, get the protection of SBI General's Trade Credit Insurance today and secure your business and growth, dono. SBI General Insurance, Suraksha और भरोसा दोनों।